Hey guys, Mike here. So obviously dumpster fire day, and boy, retailers got destroyed today, okay? Walmart yesterday, worst day since 1987. Today, I mean, Target got treated like a tech stock, lost a fourth of its value in a matter of like an hour, okay? And the CEO came out, tried to put the fire out, I think that's what he was trying to do. It made it worse. The stock went down 10 more percent after he spoke, but at least he was honest and upfront. So I'm gonna let you hear that because it's very important because he take away a couple things in the video. One, what I talked about a couple weeks ago. I said, listen up, or I will listen for us about discretionary spending. That is the money we spend after all the bills are paid for the grills and the flat screen TVs and the vacations. I said, as soon as you hear them saying that is starting to decline, that lets you a forecast of what's fixing to happen down the road. Okay. And he talks about that. And obviously the stock's down almost 30%. What do you think he said, right? But the other one is, what did we talk about yesterday? We talked about diesel fuel and how things get from point A to point B. And what was the big thing? And it really shocked a lot of people when he came out with the numbers that not only hit them this quarter, but what they're projecting forward the next quarter, just on logistics and transportation, trying to get stuff to their stores. It is shocking. And I'm not shocked actually, but a lot of people I think are. And understand the real reason this stock sold so much, because Walmart and Target, like those two safe haven stocks that people buy, and all that stuff to put in their ETFs and everything else. Well, no stock's safe in this market. And I think another reason that people are just stunned is because we just got the report saying, look, the sales and everything, the healthy economy climbed 0.9% month over month in April, which was, good and what we expected. And so I think after seeing that, people are like, oh yeah, we should be okay now. And then here comes, all these retailers saying, oh, okay, inflation's really for real now, and it's really hitting us hard, and we can't really pass the costs on anymore. And so, if you get anything out of it, hit the like and subscribe button, share the video, and let's get into what the CEO says first. And then I put a bonus in here. At the very end, I put, an interview with somebody who talks about the Shanghai ports and then what we hadn't even begun to felt right now and what Target's talking about. And this has something to do with it. They don't address that specifically. But, what's going on in Shanghai, when those ports finally open up full speed, we hadn't even begun to felt this yet, guys.
But clearly, the challenge for us in this quarter was the back of house. From a freight and transportation standpoint, things have changed significantly from even 13 weeks ago. I did not project the kind of significant increases we would see in freight and transportation costs. And you've been talking about it on CNBC almost every day. I think yet again this morning you talked about all-time record fuel and diesel costs. Right now, we project that's going to hit us about $1 billion of incremental costs in this fiscal year. So a significant increase that we didn't anticipate.
And so, yeah, and I think there's something else he ain't forecasted. Again, you'll see that at the end, but we'll see how that affects them. But this next one, and he makes really good points about the discretionary spending of what's happening. Okay, it's not just slowing down, but more importantly, we're starting to spend in different places.
The mix of the categories looked very different than we expected. We saw great strength in food and beverage and household essentials. Our beauty business grew by double digits, but we started to see some softening in some of the discretionary categories, including those big bulky categories, TVs, kitchen appliances, bikes. As the consumer started to shop differently, I'll come back and talk about what we're seeing from a trend standpoint. That certainly impacted our mix and our margin mix, but it's also added complexity in our supply chain. Those big bulky items are now in our supply chain, not moving at the rate we expected. We had inventory that we would have liked to have had last year that arrived late.
And so, yeah, I mean, we're still spending money. If you saw my video earlier, if not, I'll attach it at the end. If you didn't see the video yesterday, I'll put it at the end as well. That, people have taken out a whole lot of credit cards, right, to start putting this stuff on. We want to go on vacations. I think that's going to be really key data to watch over the summer, exactly how much traveling we're actually doing. Because even people in the comments, the membership, we talk to each other and say, they're taking one vacation, not two, or maybe not taking any vacation at all. Or if they're retired and they're watching their retirements go down the tubes right now in this market, they definitely ain't going to be doing anything, right? And so, that's key. But, one thing to start to keep consideration is I always like to look ahead, right? What's coming down the pipeline? What's coming down the pipeline? What's going on with Shanghai? They've been doing these shutdowns. Tesla's had to shut down the factory. They've been doing it for a long time, because of zero, what they got over there that I won't bother saying. But, you know, this is going to affect the ports just like it did in California. You're seeing the same stuff. Remember when the ports and the ships were backed up a mile long and everything? Couldn't get in to get the containers on, couldn't get the containers off, all that stuff. Well, that's what's going on in Shanghai now.
I want to start with what we are calling dwell times. And what are they? Well, vessel dwell times tells you how long a vessel is at anchor. And for the containers, for the container dwell time, it's actually the length of time that the box waits at the port to get on the vessel. And so what does all this mean? It actually tells you the truth in terms of zero COVID and the impact it is having on the U.S. supply chain. When you're looking at the imports, and that's where the vessel dwell time comes in, that shows you that vessels are near a wait time as high as 12 days. That is a very, very long time, whereas normally you're only in port, you're waiting maybe a day or two. For the exports, and this is critical, this is the U.S. supply chain here. Like Shanghai, if you will, is like the heartbeat for the intra-Asia trade route. And so what happens is you've got Cambodia, Vietnam, Malaysia, all of these countries bounce a product back and forth to get finished. And this also includes Japan. Last week, the audience may remember that Toyota, Mitsubishi, and Suzuki all came out saying that they were either closing factories or they had to stop back production because of the lack of raw materials to make their product. And then closer to Shanghai's home, Tesla. They last week had to shut down production as well.
So how are these delays from Shanghai hitting U.S. exports on finished goods?
Well, this is the chart that really speaks the story. You are looking at Shanghai exports into the United States. That is a ski slope. No country wants to see their trade in a downward trajectory. And what's going to happen is once things reopen, you're going to have the container crunch that everybody is going to be talking about.
And so this is like Groundhog's Day all over, right? I mean, what happened in California? I did a detailed video for you guys about that. It's the same thing. It's this vicious cycle. When you're finally able to get the ships in port and then start to get things unloaded, you have nowhere to put them because there's always empty containers and people aren't coming to get them, and they try to come get them, and then they get blocked under this, and it becomes this hot mess. And what you're saying is true, because I actually was going to do a detailed video about a month ago about this, because that's when it started really getting bad, and I had these satellite photos and everything showing before the shutdown or lockdown, after the lockdown. You can see plain as day the amount of ships. It's like 4 times what it was just sitting there waiting to dock, okay? And unfortunately, in America, where do we get all our stuff from? The Asian countries. I mean, unfortunately, that's just the truth. I mean, we're 70% service, economy. I mean, what do we really make here anymore? I don't even know, but it's not a whole lot. And so we're paying the price for that, right? And so that, again, not even coming down the pipeline. You see the chart, that is stuff coming from the Asian countries to here, and it's declining. That's not good. It's supposed to be going up or at least level with something, and it's not. And so, we'll see how that goes. We'll start listening for that on the conference calls, and what the CEOs have to say about that. But unfortunately, Walmart and Tesla, those are safe havens, right, for people to get into. Not just people, but the funds. That's what they were kind of fleeing to when they were moving out of tech. And now they're going, wait a minute, that's going down too, right? And so the only thing you really, I think the hedge funds are safe in right now, what they're piling into is energy utilities, right? They're driving those up sky high. And as the video showed yesterday, that rubber band's getting stretched, man, stretched, because you really have to ask yourself, how long sustainably as an economy here and as the consumer can we last with energy prices as high as they are, right? I mean, just for example, look at coal. Look at this right here. Since January this year, it's up over 250%. Coal, which, you go, well, I expect oil maybe and natural gas, but coal. Oh yes, even coal, and so the bills, the power bills, utility bills. I mean, it's gas to get back and forth and work. It's crazy. I mean, look in the comments from yesterday's video. People are putting it in there, telling you. I mean, talk to your neighbors if you don't believe it. I mean, and that stuff, it takes a while to add up and to have its effect, but it just does, and so, and I hate it. I mean, I wish it would change, but again, it's, I don't have any answers for when energy is going to come down, utilities and all that stuff. And it's going to be interesting to see where the hedge funds are going to start moving, right? Because the video earlier today talked about how much cash they have on hand. There's a whole lot of selling today, right? So not a lot of buying. So where are they planning on trying to park some of the money now? That's the big question. It's not going to be in bonds and all these other places. So anyway, hope you got something out of it. Hit the like and subscribe button. Hit me up in the comments if you got any input on this video or the one from earlier and stuff. So and I'll end up seeing you tomorrow.